right, everyone, welcome back to another episode of On the Margin. Today, I am joined by Amy Wu, who's the head of ventures at FTX. Amy, welcome to the show.
Thanks for having me on, Michael.
All right, we've got a lot of really interesting stuff to dig into here. So before we get into like the whole venture environment in crypto and NFTs and the gaming space, which I know you are an expert in, could you give us a sense of your background? So you have this super interesting background as both like a VC investor in more traditional markets, an operator. So give us a sense of where you've been in your career and how you kind of wound up at FTX.
Yeah, that sounds great. So I've spent a little bit more time as a venture investor in my career than an operator, but maybe like 60-40. On the venture side, I started my career at Inside Venture Partners, which is doing kind of more traditional tech investing, across stage, but mostly growth, based in New York City. And then was more recently, right before FTX, I was a partner at Lightspeed, which is a large VC fund based out in Silicon Valley, where I was leading our crypto investing and also gaming investing, some consumer internet growth as well. When I was there, I was leading investments, like Alchemy and Arbitrum, but then also on the Web2 side, Webull and Fortnite, number of gaming companies. And then on the operator side, so I had spent a few years as a CFO of a software company called Welcome, based in New York. And then also was an executive at Discovery in actually traditional media.
All right,
So it was like
let's
very
go.
different. Yeah.
Very cool. All right. So long road, but we're glad that you ended up in crypto. Give us a sense right now, before we get into some of the specifics about what you're focused on in the NFT and gaming space, like give me a sense of what the venture environment looks like in crypto in general, right? Because I know like in macro land, right, we kind of have this era of rising rates, right? A lot of tech startups are kind of struggling. Founders are taking big haircuts. It seems like that hasn't really found its way into crypto yet. So give us a sense of like how the market is for VC, maybe on like the earlier stage in crypto.
Yep. So a couple of thoughts. So I started investing in crypto in 2017, which, actually at the last cycle, right?
Yep.
Prior to the bear market. And if I were to contrast the two, I would say that the universe of investors were not as locked in like kind of with overlap as it is this time. So what I mean by that is that the bull bear market for crypto was offset from actually the equities environment, up until I would say this bull market, when you actually have a significantly much higher overlap of, for example, tech equities investors, just investors in general, and crypto investors. And so that's why you're seeing more of like an overlap, I think, in the two cycles. The other thing that's different was in the last bear market in 2018, a lot of people honestly exited the space. People stopped talking about crypto, and it was like a gradual thing. I would say in 2018, people are still talking about it, although, and then by 2019, right, a lot of people had just exited like crypto. And that very much, like I would predict that that's not going to, that hasn't happened so far in this cycle. And no matter kind of like what your estimate is on how long this bear market might last, like it's not happening this time. And I think, reasons why, like the last cycle was a lot more about speculators. And this cycle is a lot more, I think the narrative is really around builders. Now, I think that we are still potentially one cycle away from mainstream adoption, mainstream use cases. Hopefully that will drive the next one, for example. But yeah, like still relatively early asset class, right? That's why you have these like more volatile kind of swings, 50 to 90% declines in token value that you don't really necessarily see in equities and some of the other asset classes. But I think like with each cycle, it's becoming more mature. And right now, I would say that when I talk to a lot of the builders, they're like, we're not checking token prices on a daily basis. Some of them are grateful for having raised in the bull market, and they're all building right now.
Yeah, absolutely. I'd say maybe one of the other big differences as well, like at the end of that 2017, 2018 cycle, you did see VC investment peak like a couple months after the market kind of topped. And that's a pattern that I think is repeated this time. But I think maybe one of the big differences is just the raw amount of capital that's entered the space, right? Just huge fund,
Absolutely.
right? Like, and that's funds that were already deployed in kind of like later stage companies, but also it seems like there's a lot of kind of dry powder sitting on the sidelines. And that, that idea, right? Like Andreessen, right? To just point at one, raised like $4 billion and $1.5 billion was marked for like seed stage deals. So I'm kind of doing math, like how the hell can they even deploy that money anyway? But maybe that explains a little bit about how, because, from me talking to kind of my network of founders, it seems like it's still capital is still readily available, and valuations haven't adjusted an enormous amount. Is that something that you're seeing on your side of things, or like how are you kind of thinking about valuations in kind of the earlier stage of crypto investing?
Yeah, I would say a couple of months ago, capital sort of retrenched and people were just waiting. The same thing actually happened at the very beginning of COVID. And actually, investors that were really aggressive took advantage of that time and actually invested fairly heavily and got some great structured deals. I remember this happened to Airbnb. This happened to a lot of the big tech
Oh
companies.
yeah,
And because I mean, people did not expect a V-shaped recovery, right?
no,
This time, I think that to your point, VC funds and new funds had all sort of raised like billions of dollars of capital actually in the bull market, and so there is absolutely so much capital on the sidelines. My experience though is that rounds are taking a little bit more time to close, and
mm,
there is a little bit of like capital actually like sort of concentrating around the more experienced teams that are raising
got it.
rather than I would say like during the bull market. I mean, it was truly like you had a deck and people were doing literally no diligence and they were
Yeah.
throwing in a check at like, pre-product, pre-revenue, pre-launch at like 100 million
Oh
FPV
my,
or like
yeah.
equity valuation, right? And I would say that that's not really happening right now at the
Mm,
seed stage, which is all in all like a much healthier place. But I do think that the capital flight to quality is absolutely happening, and because there's so much capital still, the rounds are absolutely getting raised pretty quickly. More in the C Series A, in my experience, I think the later stage rounds are getting smaller. The valuations are coming back to earth. A lot of the valuations in a growth stage round is being pegged to actually like equity market multiples, which the delta between now and bull market is extreme. And I can give a couple of examples of that. Like in
yeah.
fintech, when as of last fall, right? I think your average multiple was something like 25 times EBITDA, and now it's like around like between like 7 to 10. So around like more in like 5 to 10. So it's really adjusted significantly. And so at the growth stage, I would say the rounds are much longer to be raised, and also like kind of just like valuations are down to earth.
Do you see any opportunity between kind of the valuation in like private equity in crypto versus like tokens? Like my understanding is, and again, I'm not, involved in the investor side of things as much, but what I've kind of heard is that, well, tokens are relatively cheap compared to maybe some of the like the private equity opportunities that are kind of existing in crypto. How do you kind of assess, or like, do you see a like discontinuity in between like crypto, like public liquid token valuations versus private equity? And if so, like how do you kind of suss out the opportunity in between those two different things?
By private equity, do you mean like investing in the equity
In the
part
equity,
of the
yeah. In the
company?
equity, yeah. The equity part of the company, yeah.
I feel like the two have always sort of like come hand in hand,
Mm,
where you're actually pegging a little bit to the equity valuation. And by the way, like the first thing we always think about is how does the entrepreneur think about value accretion to the equity versus token part of the project.
yeah.
One thing that I think that we have observed is that there what we've seen is that it's actually pretty difficult to create sustained token value.
Mm,
And so I think whereas before, an investor very readily would just say, of course, this token is going to create a lot of value and it will be worth $10 billion or whatever the peg
yeah.
is. And I think that there has been so many tokens that has really lost like 90% plus of their value, like in this market, that an investor is going to take a little bit more pause in thinking about what that might look like. Um, and so, but the two have always sort of come hand in hand. You're thinking about how much equity as an entrepreneur are you willing to sell to an investor, and then of course on the token side, you're thinking about that, but you're also thinking about decentralization, and of course, like I would say in general, having an investor owning anything like north of like let's say 10%. Is kind of not seen very favorably in the community. And
Mm.
so there's that consideration for the token side.
How do you think about, because you come from, a much more traditional kind of VC background, right, at Lightspeed. So I'd be curious, like, do you think your kind of Web2 VC instincts have like served you well in the space, or are there like new dynamics that you think in being a venture investor in Web3 that you kind of had to learn? Like, I kind of see the guys at Multicoin. I was talking about how you want to own the relationship with the customer, right? And that's where there's going to accrue value. And then there's like this kind of Web3 crypto native ethos, which is fat protocols, right? And value accruing at the layer of like, Bitcoin or ETH or like the layer one, basically. So like, how do you kind of pair off your more traditional background in Web2 investing instincts with this new world of Web3?
It's definitely a bit of both. I think
Yeah.
I've learned so much, and particularly since I joined FTX, around the different ways to build value as a create value as a crypto investor.
Mm.
There's a lot more you can do when you have a token, right? You can participate in liquidity pools. You can farm, you can stake the investment. You're participating in governance. It is a lot more complex and active management, I would say.
Yeah.
There's also a timing component to it, right? Because you have cycles. And so, not managing the position to some of the cycles sometimes is like an issue, like with crypto. And like a great crypto investor is able to thread the needle between like playing some of that timing and then also supporting the project on a long-term basis. And then once the token is liquid, and you have the crypto hedge funds are all really focused on timing, actually.
Mm.
And that really like dictates where the pricing is actually. So I would say those components are all very like specific to crypto investing that I've learned in the space. And Versus, I think that a quality of crypto investors that is maybe like not as deeply held, or like just does that experience isn't like as deep, is this concept of like company building, that in venture, at for example at Lightspeed, there's essentially 25 years plus of muscle
Yeah.
memory of like the senior partners there with building companies across multiple economic cycles. What does it mean? When to be aggressive, when to be defensive, when to hire the right people, right teams, and because liquidity comes oftentimes very quickly in crypto, and so and also many of these founders, this is the first businesses they've ever actually built. A lot of them
Mm-hmm.
actually do not come from Web2, which actually may I start changing like in this cycle. But and so I think there's like a lot of new learnings, and anyway, I like try to bring that lens from Web2 venture investing over in crypto as well, and
Yeah.
just advise like some amount of patience and long term thinking around building, but also being recognizing that in crypto the cycles are 24/7 and happen much faster.
Yeah, they certainly do. Do you have kind of a thesis on, like when you go back, right, to 2017, 2018, like a lot of the great companies that got funded in that era were a direct response to some of the problems that existed back then, right? So back then there was like no capital markets infrastructure as a professional investor to like get access to crypto, right? So you had like kind of these very prime brokeragey, like these BlockFi companies get funded, and those were very capital markets focused. Do you have a sense of like now we've just seen a rollover in CeFi in general, right? There's been a lot of explosions of like leverage, some trust issues there. We've seen the growth of gaming and NFTs, which I know you're deep into. Do you kind of have a thesis right now that there's like there's some, I guess, downtime, so to speak, or it's certainly not like a crazy bull market anymore? Do you have kind of a thesis for the next like couple of years about what are going to be big focus areas for the industry?
Yeah, maybe I'll highlight a few that we think about
Mm.
a lot on
Yeah.
ventures. One is that the infrastructure layer is far from established.
Mm.
The standards, the multi-chain versus single chain versus maybe two or three dominant chains. All of these things are like what does the infrastructure layer look like? Is there going to be a cross chain like independent messaging and identity layer? Will a social network, incumbent or not, actually own that layer? Like a
Mm,
lot of these questions are unsolved right now, and so I would say that there is a pretty massive battle right now for dominance of the infrastructure layer.
mm,
And the interesting thing also is that and then if you look at the application layer in crypto, there is yet to be these like super large dominant application players. There's a
mm,
few emerging, and that can be like OpenSea and Magic Eden, MetaMask, and some others that really have accrued like large numbers of users. But I would say that like what does the next wave of that look like? And does are the incumbents going to actually have a pretty massive advantage because they have existing distribution already, or will a new player actually build a killer, sort of consumer or like enterprise application and
mm.
be able to kind of build like this, like kind of full stack like Web3 native company? Maybe it's a combination of the two. I think that is really going to be the next wave of innovation happening in the space. Some trends there that I kind of see. A lot of conversations going on around the identity layer. Now, the identity layer is one of the biggest unsolved problems in
Agreed.
crypto. It's probably the single thing, maybe the single thing barring like mass adoption right now. The fact that there is like literally rug pulls left and right. Also, it's extraordinarily difficult to use any DeFi tool for a normal person. I mean, I am slightly terrified every time I transfer assets from
Me too.
MetaMask myself. Yeah.
Yeah.
Of like great value, like
Yeah.
of any material value. And that's pretty much like, I would say like unacceptable for like mass adoption of this space. And that's like kind of like a combination of UX issues, but then also like identity and security and safety. And so there has been a lot of false starts. There have been companies trying to solve this for years now. Nobody has gained traction. I have this like vague thesis that I actually think that an independent platform will not win this. That actually like somebody with the distribution will solve the identity layer. I do actually think potentially like either an incumbent or a new social network or messaging application with a very large distribution of users may well solve the layer this problem, right? And for example, create what might be like, for example, the Facebook Connect
Right.
of crypto. And so I think like that is sort of TBD as to who's going to win that. It's like an extremely interesting space.
Can you give us like an example, I mean, just for the audience who might be trying to follow along here, like when you say the digital identity layer, right? Is that like maybe like a Meta kind of comes in and says, okay, like we're leaning into Web3 and we'll build this on maybe this like, the Ethereum layer, whatever, but like here's a digital little like wallet address that can point to this real life identity? Or like what would, like, let's say an incumbent like Web2 kind of social media giant, like how could they win this space in Web3? Like what would this
So
look like?
like you can imagine like a social network. I'm already, they already have, let's say, millions of users like signing in all the time. Let's
Yeah.
say let's use the example of an incumbent wins this space. So maybe Meta, maybe someone else like Reddit, Snapchat, Discord might go out and say, okay, now we're going to like launch Web3, your ability to interact with us in Web3 assets. Maybe that's an NFT marketplace. Maybe that's ability to collect tokens on their platform from one of their communities. There's the community points with like Reddit, right?
Yeah.
That they've been talking about for the last couple of years. Then there's, you can imagine that at that point, perhaps they ask the user to authenticate into what is their identity layer. Like, okay, we want you to be safe and we want you to know that you can interact with safe third party communities on our platform. And so authenticate here by perhaps like integrating your DeFi wallets like into this platform. All of a sudden they have your identity actually with their equivalent of a blue check mark, that then you can bring that identity with you and then sign into other accounts because you've already signed in once with whatever is the social network that has that. And then once you sign into another app, maybe you allow the first app to actually collect the information of like what you're doing, interacting, what NFTs you're buying, or what assets you're collecting on that second app. And then suddenly you have like essentially Web3 Facebook Connect.
Yeah. Wow, that's fascinating. I think maybe people, the super crypto natives, will have mixed feelings about a Meta winning that, but I guess we'll
Yeah,
see.
I think they will absolutely because I mean this concept is extraordinarily centralized. You know, when I talk to
Yeah.
some friends in the space, I mean they're kind of like that's a bit sacrilegious, and why are we even? Why does Web3 or blockchain protocols even exist if we're just going to replace one centralized stack with another centralized stack? I mean, it's a question as to whether the end user cares
Yeah.
about the decentralization.
People talk a lot about, right, and maybe from like even a much earlier period of time, just because of the narrative that emerged around Bitcoin, right, as this like global store of value, this new form of money. There was this like kind of Bitcoin versus banks, right, narrative that people will be very familiar with in this space. But it makes a lot of sense, right? Like if the ultimate version of crypto is kind of like online property rights and all that kind of thing, then Web 2 versus Web 3 could be a big dynamic that you could see emerge. I was actually a little surprised to see when Zuck did Meta, which I have real mixed feelings about because on the one hand, I just respect it. It's such a bold move. And I think that's like to bet the company like that and change the name and invest that much. And like he's getting pummeled for that right now, but it's still anybody's game, I think. So I respect the move, but also it's like, do we really want Facebook? Because he could be a really good he's not a missionary, right? He's definitely like a very sharp operator, and he could he's definitely, I'm not sure he's in line with the crypto ethos. So I could kind of see his involvement going either way, honestly.
Yeah, I think a lot of both incumbents and new players have the ability to really win significant market share in this evolving landscape. And so it
Yeah.
may be Meta, it may not be. In any case, I mean, if you take even Meta, right, and if you look at the macro of what is potentially like a declining ads business, like at least in, for example, on
It's
Facebook,
interesting. Yeah.
um, and they've got to continue staying a few steps ahead and innovating themselves, like Microsoft, like any large incumbent does. And they're basically battling at the same time these like native crypto companies with no debt, right? That is iterating faster than they are. With less resources, like in distribution, those are two areas that they have an upper hand on. But I mean, that's sort of been sort of like since the dawn of tech cycles, always that tug and pull.
I agree. Let's talk about some frontier areas that you're involved in. I'd love to get your perspective on gaming in general. I know that's something that you did again in your past life, and I've heard you talk about you as a gamer as well, playing Diablo, etc. A little while ago, maybe like 6 or 9 months ago, whenever you went on the Bankless podcast, there's a real backlash, right, from more traditional gamers and gaming studios about NFTs, and they were kind of roundly rejecting this idea of kind of play to earn or play and earn, right, which has become popularized in crypto. Kind of walk us through like what is the response, I guess, in traditional gamer land to NFTs, and then or just get like play to earn, work to earn in general, and then like what's your kind of investment and thesis on the space?
Yeah, my thesis really hasn't changed all that much, to be honest. And there continues to be a lot of activity in the space. First, like we're as excited as ever that in gaming is potentially one of the major pillars of
Mm,
mainstream adoption of like tokens, right? And NFTs, because again, like it's such a natural extension of that. Like gamers have long found value in digital objects, right? And basically collect them in a medium that is like much more flexible, right? You can take
mm,
it out of this ecosystem. It's not so much closed garden. It seems like a natural sidestep. There is like definitely a dichotomy, I think, in the West versus East. like in terms of gamers, there has actually long been like in the gaming world. And as a quick aside, like, yeah, I've been a gaming investor longer than crypto. So it's super interesting to see the two worlds collide just for myself. Like,
Yeah.
have long been like super excited about all of the innovations going on in gaming. The gaming space, particularly in mobile gaming, if you like look a level higher, has been sort of going through a bit of a crisis right now.
Mm.
IDFA, which really changed the ability for casual gaming, mobile games, and particularly hyper casual, and also I would say like mid-core games and hardcore mid-core games to really target specific users, has been significantly impacted on the negative for iOS. And then there's a second trend going on right now where Google Android has recently announced that they're changing their ads, like sort of, I would say, policy around how a gaming company can place ads in their game to actually promote a better user experience. And there's been some discussion around how first, like, I think a lot of ad dollars moved from iOS to Android and during the IDFA initiative, and then now, like, potentially there's going to be a second large hit in certain gaming on like sectors in on Android as well. And so what's happening is there's like been a decline in monetization for a lot of games, and also in this macro environment, a lot of declining multiples also in the gaming sector has led, and this is after a huge high, right? So like during COVID, the gaming sector was one of the biggest beneficiaries, because when people stay indoors, they play games. And
Play games.
so,
Yeah.
yeah. And so it was actually off the back of a huge, like, rise of this entire sector. You see kind of like a adjustment back into land. All of these more like negative influences has led to a consolidation in a space. Like so many M&A like mergers that you see from Microsoft to like others, and also actually like an active interest in gaming studios to look for what is the next frontier. Web3 games remains like a very interesting design space for gaming companies. And I would say there's hardly a gaming company that's not at some point like interested in at least throwing a couple of experiments in that space, right? If you think about a gaming company, at least an incumbent one, they are run as a portfolio. At any point, there are new games being designed, launched, in hopes that like one of them will become very large. And so it is quite like natural for one or two of these experiments to be crypto games.
Yeah.
Now the larger narrative around crypto games has been like, oh, is the space dead? All of these Ponzi games that really kind of like died right in the last like
Yeah.
couple of months, particularly in this bear market environment. Now that is like it is one environment. I mean, but I would argue that most of these games are actually quite like hyper casual or casual in nature, and these games have really short cycles anyway. The longer cycle games that are much harder to build, like whether it's an MMO or like a AAA type of quality of game, or like these more involved like RPG games, are still in development. They actually raised funding and have been in development for the last like few months since the bull market, and they're not probably going to be launched for the next 12 months, right? It takes years to build one of these games, which is why I'm like, my thesis has long been, okay, there's hundreds of these games being developed right now, these Web3 games. The probability that one or more of them don't become a hit is actually quite low, like from a probability perspective. And so I'm super still excited about that. We at FTX Ventures has invested in a portfolio of almost a dozen of them this year. And so we're super excited to see when they launch, like, how they go. Understanding that if you look at investing in gaming, investors that have invested in the space for a long time invest in a portfolio, because the success curve is very stark. Like the top 20 games in the world right now probably make up like the vast majority of revenues in gaming.
Yeah.
And every year, maybe there's a couple of indie hits that break out. 90+% of all games that launch will fail. And so that's why, like, that's my expectation of our portfolio. And we invested in the most experienced like game entrepreneurs, like I think in this space, and hopefully they'll go well. But like, so that's like a bit of a color around that. The last thing I'll say is that I had visited Korea a couple months ago and was just like super like amazed to see how progressive the large gaming companies were there in terms of experimentation in Web3. They have multiple games launching. You know, some of them are taking the step, the bold step, in building their own blockchain as well. Um, and um, and so like I think it's like a bed of innovation that had a bit of a pullback with the collapse of Terra Luna since it's so so heavily impacted the Korea market. But yeah, so much innovation going on in Asia in the gaming space. And so, yeah, I think over the next like couple of years, we'll continue seeing a lot of innovation in that space.
Yeah, I would tend to agree with you. I've got you designed or you indicated that like Web3 might be a new design space for gaming. I'd be curious to get your thoughts on what is possible using Web3 as a design space for a game that wasn't necessarily possible in the analog. Like, a lot of the backlash, right, was around kind of the model of like play to earn and having there be a monetary component as opposed to just a pure play component in the game. But like it's easy to look at something like, not to pick on any, but like Axie Infinity and say, look at these graphics. This game isn't particularly fun. It's just not as good as what came before, yada, yada. But like, what is the thing that's better, right? What is possible to do in a Web3 gaming environment that was simply not possible to have happen in what sort of came before?
I think that a particular innovation of Axie Infinity is like they took what was a gray market before, which is having like, for example, like, gold farmers in these like more sort of lower cost markets
Yeah.
and then allowing this arbitrage, right, to happen between like someone who's willing to pay for that kind of farming that has basically existed since like the dawn of gaming.
Mm.
And because like you can, as one player, own the wallet that owns the Axie assets. Suddenly, you have this form factor that is like very conducive to to actually like allowing these farmers that are interacting with your assets, right? Which kind of gave rise to this concept of guilds, and they essentially, whereas before you sort of had um, stakeholder risk where maybe like I remember some of my friends used to play like exchange items in World of Warcraft by like you buy their pencil like on like eBay for like
Right.
$1,000 in exchange
Yeah.
for like an item
Mm.
in the game, and then like are you actually going to get the item or not? You're not really sure, right? There's a lot of risk around that, and that is like solved through like somebody actually owning the keys to wallet. I'm just using that as an example. Obviously Axie had innovated a lot more than that, but one, it basically facilitates making a gray market not so gray. The second thing is that more fundamentally, it is an open market economy system, right? What the items that you grind and the tokens that you essentially earn in a game can then be readily traded on an open market. It actually, like, there's always been some speculators in a game, but you really open up this economy for speculators
That's really
in that.
interesting. So like even like selling, like you can build assets in this game that you can maybe sell to people in the outside world, but like even having characters in a sandbox type environment be able to transact internally with no external payment processing or whatever just seems really smooth, right? And I think
It's
Axie
smoother. It's smoother, yeah.
really smooth, yeah. And yeah, okay, so this is really interesting.
Hypothetically,
Okay, yeah,
hypothetically, it's really smooth.
yeah,
I will
yeah,
say that
yeah.
like the
In
experience of
practice,
like in practice experience of actually like going on an exchange, buying currency, then downloading a non-custodial wallet, transferring the assets to that non-custodial wallet, then bridging to another to an in-game, like that experience is not smooth, right? But
no,
like
no.
theoretically it can actually like reduce friction quite a bit, but then also just provide an open economy versus the previous closed economy of every other game that's really been created like today.
Do, do you think that because we saw Axie build their own decks, right? They had Ronin.
Mm-hmm.
Do you see these games like building their own in like almost like in-game financial infrastructure, right? Like a decentralized exchange, custodian, whatever, like whatever that like full service capital market stack is, or do you see them plugging in to DeFi infrastructure, like leveraging liquidity from Uniswap, for instance?
Yeah. Um, I have my personal belief, which is that I think that most gaming studios will stick to what they really do best, which is
Do
create
best.
amazing content. And I think that creating DeFi protocols is a very different skill set. And so I would say
I'm
that
with
like
you.
most studios would choose to go down that route, and that's what I see. But I mean, Axi's team has like great ambitions, and so the fact that they're able to do that is great for them.
I agree. Yeah. And I have nothing but respect for the team, but I'm a believer in competencies as a company, and you can't have infinite competencies, right? So if
I
you say you're going to, yeah,
I believe that as well philosophically.
yeah, yeah. All right. Let's talk about NFTs in general. This is a really interesting space, right? We just came off NFT NYC, enormous amount of energy there. So talk to me about, and you were excited about that. I know you want to, kind of chat about this on this interview. So what are you seeing kind of in NFT land, both in terms of like kind of the funding environment and investments and team building that's happening, but also like any trends or themes that you're seeing that you're particularly excited in?
Yeah, I mean, I've been spending a lot of my time in the NFT space since we started building our relationship with Yuga Labs actually at the beginning of the year, and then we
Mm-hmm.
subsequently essentially co-led their round, and then also was pretty involved with like helping them set up their helping actually like what is like the sister DAO, right, get set up, 8 Point
Yeah.
DAO, and then where I'm still very active on the board there, and just seeing this space sort of like mature from just like PFPs to companies with like the ambition to build tech products and build a brand. So like merchandise and entertainment and media has been really, really fascinating. I think that NFT NYC is going to go down as the biggest crypto event of this year. That was Bitcoin Miami last year, but I think this year it is like NFT NYC. Like if you include all of the side events, the people who were just in New York City experiencing what were some of the most elaborate events, like thrown and experiences. I think events is like almost like making light of what these experiences created by like the Asuki team and like the Yuka team and Cool Cats and all the other awesome like blue chip projects, but also like up and coming projects as well.
Mm.
And it was like a coming together of NFT brands, really projects with real life brands that are all like interested in seeing what was going on, but also like seeing some of that collaboration start playing out. Um, and um, and like so, it's been a space that I found a lot of inspiration in because I think that these are brands. NFTs are brands
Yeah.
ultimately, and they're taking different approaches. Each team is like kind of taking a different approach right now with like who they want to be. Like, do they want to create some of these experiences first party, or are they actually like embracing their sort of identity as ultimately an IP company and working
Yeah.
with the best partners actually, like to create experiences, games, movies, etc. And so it's been amazing seeing that like with each team. I've had the great pleasure of like speaking with most of the teams, and it's been also interesting off the back of NFT NYC. It generated so much interest that I would say like almost every project is raising right now,
Interesting.
and so I think we'll see a number of those rounds being like announced in the next few months, and then we'll see like the creation of hopefully like of real utility in this space. Real products being built with like brands that actually have like decades of experience building luxury goods or like beverages and everything else kind of under the sun, and I'm really hoping that there will be a few NFT projects that really emerge as like the next like mega brands of the space.
Yeah. How would you say, could you describe like a couple of the different approaches that you see NFT projects taking? Because my thought looking at the NFT space is in general, like these are IP companies, right? And
Yeah,
this is like the way I sort of view it internally, it's like, okay, there's an initial raise, right? Like there's a fundraise, the primary sale of the NFTs, right? That's like the fundraise to build out the IP. And then the revenue model is secondary sales. And the way that
yeah.
you generate more revenue model, like the secondary sales, the kind of turnover is by investing in and building that IP to create a community that people want to be a part of. Is that like the working kind of primary model? Is there another way that NFT communities are thinking about it? Like how would you sort of break things out?
So I would say that most projects aren't thinking about it in such tactical terms, although like inevitably that does happen. They're thinking first and foremost, for the most part, about the communities that they
Yeah.
are that they are creating, right? And so as you can imagine, brands, whether that is like, Marvel or Disney, like, or within Marvel, like the individual Disney brands, or like luxury brands, like the LVMH group, and like, or maybe even like hotel brand. Like I would say that each of them starts with like thinking about like what is their target demographic, what's the culture they're creating with that brand, right? And it starts with a core segment of that and being able to define it clearly. And then from there, and I think like when you look at right now, like the best NFT projects, they are extraordinarily good at building community first and
Mm.
foremost. And then that's why they have created what is right now like valuable IP. Um, but then expanding that, because right now I think there's like 10,000, PFP projects, right? Like, and so
Right.
you got to expand your community beyond just like
Yeah.
10,000. One way is
Agreed.
to launch a token, and then like kind of another order of magnitude of people can participate in your community that way. And then you're on the clock. You've got to like provide value for that community on a regular basis. Otherwise people are going to like dump the token,
Yeah.
inevitably. And so, but like even that is not enough. Like, how do you actually create like millions of fans in your space? And how do you balance that out with inevitably, if you have what is a luxury brand, like how do you not cannibalize the eliteness of your luxury brand, right? By bringing like,
Yeah.
another 5 million people eventually into that fold. Now that there's 5 million people, I think, in NFTs right now, but eventually, hopefully there is. Otherwise, the space will continue to be niche. Um, and so these are all, I think, the questions that some of the most advanced like NFT projects are thinking through. And in speaking with the different teams, I find that like there is like a quite a range of an ability to articulate that very crisply. And I
Mm.
think people who can't articulate that for themselves and then execute on it with a team with experience are going to probably stall, and they'll have what is an initially like strong brand, and maybe like you'll see consolidation in the space, right? Where different like NFT IP actually consolidate together. But the ones that are able to have a clear vision and go after what they want to build, will I'm like optimistic that we'll definitely see some successes in the space.
Yeah, absolutely. I know we've got we're on the tail end of our time here, but maybe if there's one thing that you're excited about, I know we've talked about NFTs, gaming as areas that you're like really particularly leaning into and spending a lot of time thinking about and investing in. But if there's any like one particular trend where you're like, wow, not a lot of people are talking about this. This is a really super cool area. Any particular spots to kind of point out that we might not have been able to cover yet?
I don't think it's anything that people haven't talked about. But I mean, people have been talking about what the next like iteration of consumer friendly Web3 products might look and feel like. That is
Yeah.
really exciting for, your average retail person who's like onboarding crypto for the first time. But people say that, and yet there's actually surprisingly few products that I would say reaches
Yeah.
that bar. And
Yeah.
so, constantly looking for that, who's going to build an app of deep utility to a user, whether that is like, I don't know, like some sort of like travel app, or, housing app or transportation app, like things
Mm.
that we do every single day, that is, gamified with a token or something like that. Uh, like I think what you finally will see in this cycle is that very experienced entrepreneurs who have been studying like this phenomenon of like Web3 and crypto, will finally be ready to incorporate those elements into their applications. And I think that when that happens, like suddenly I think crypto native investors will be like competing head to head with like long time like tech investors, as I mean we already are doing, like
Mm.
for to back these companies. And that will also give rise to like potentially like more mainstream adoption of this space. This is not a new idea. I think people have been predicting this for a while, but I think we are finally primed to finally get there with these
Yeah.
products.
Awesome, Amy. You've been super generous with your time. If folks want to find out more about you, the work you're doing at FTX, what's the best way to follow you or get more information?
They can find me at Amy Tongwu on Twitter. and my DMs are open.
Awesome. Sweet. Amy, thank you so much. This was really fascinating. We'll have to do it again soon.
Thanks so much, Michael.
Cheers.